Gilbert Carmona. The program is Gilbert Talks Taxes. We are on WCAB AM 590, FM 100.9. Those of you live streaming, we're looking good here this morning. www.wcab59.com. Those of you that are watching me live streaming can see I am wearing my bow tie.
Did you make it spin?
No, it is, no, this is a vintage bow tie. Black and blue. Yes, we're alive and peppy. I like that. Fresh, alive, and peppy this morning. Right here. Those of you live streaming, good morning. And it's interesting because this program gets picked up later. WCAB gets picked up later all over the country. People said they've seen me on YouTube. I didn't even know I was on YouTube. I didn't even know I was on there. They pick it up later and they tell me, oh, I saw you on YouTube, and they call me, which is fantastic. I really don't care how they find me, as long as they find me. I am an enrolled agent. An enrolled agent is a person that is enrolled with the IRS. So what do I do as an enrolled agent, Tom? I prepare tax returns. That is the number one thing that I do. But in order to prepare tax returns, you really have to be a taxation expert. And that's what enrolled agents are. We are the only federally licensed, and actually we're not licensed, we're enrolled. We're actually part of the team, but I represent you, the taxpayer. I'm on your team. If you have any problems, I can deal with the IRS. I solve issues, and these days, that's saying a lot. If you can get an IRS agent on the phone these days, that's saying a lot. Oh, yeah. Well, as an enrolled agent, we have the practitioner line, and I can connect pretty readily. The IRS announced that they're only answering 9% of all calls. 9%. And I think that's high. I think that's on a good day. They're answering 9% of the calls. It's more like the real numbers they're saying is more like 3%. I'm hearing stories. People are waiting hours, but that's what I do. I talk to the IRS. I prepare tax returns. I do financial planning. We do investments, and the bottom line is, I try to get you to pay as little in taxes, get as big a refund as possible, and do it all under the tax code. That's pretty much my mission in life, Tom. So did I nutshell the whole 1 hour program that way? I have here in front of me, and I brought it with me. I think I brought it last week or the week before, and I had it with me because I was looking up some tax law before the program, a case I'm working on. And for those of you live streaming, this thing really weighs about 10 pounds. I have the condensed. Let me tell you, it's condensed. This is the tax code, but it's condensed now. This is for pocket reading. It's an inch and a half, an inch and 3/4 thick, and it weighs about 10 pounds, and it's conveniently indexed by the people that put this out. This is actually compiled. I have another one, but I think it's too hard to use. I have another one that is literally 2.5 inches thick. And that's the consolidated tax code for quick reading, and it's like an 8 font. I'm getting too old to read that size print. I don't carry that one with me, but it's the tax code, and it's gotten very serious. We've always tried to have fun with it. We've talked about politics. We definitely talk about God and talk about religion and just talk about life on the program. And a lot of things have happened in, the 8 years I've been doing this. But it's really getting more serious. The last year was the first year, as an example, of how serious, and when I say it's getting serious, I'm talking about tax code and what's happening with the IRS and just the requirements on people. The old days where you do your tax, you prepare your tax return. Oh, I'm getting a refund. Great. Oh, I owe some money. Oh no. And you move on to the next thing. Now there are issues that are, for whatever reason, people are having to deal with for years. And it's very stressful for some people. Yesterday, I had somebody in my office who now I did not prepare their tax return. Let me say that. And I say that because I don't know enough about the case to speak about it yet. But they came because somebody else did their tax return back in April. They still haven't gotten their refund. They get nothing from the IRS. They've called and called and called and called and called. And the one letter they did get was a simple issue, but the person that prepared the tax return didn't know what to do with it. So they're like, here we are into the next year already, and I still have loose ends from last year. It's getting it's just getting very complicated. And the days of just going to a tax preparer, that's all they do is, and when I say tax preparer, that's all they do is prepare taxes. You really need a tax professional. It's gotten to that level. You know, when the government promised us they were going to simplify the tax code, I just picked up, that was me picking up the tax book, by the way. This is after the simplification, you know, and it's going to get, it's getting more and more complicated. So last year was the first year that the do-it-yourself tax prepare, so there's a group of people that do it themselves. And the IRS can pretty much monitor that group because they know who it is. And it's about, typically it runs anywhere from, it depends. It runs anywhere from 30 to 40% of the tax returns prepared are prepared by do-it-yourselfers. The rest of it are prepared by professionals. Last year was the first year that number actually dropped, and it dropped a lot. This year, we're already seeing a lot of people calling us that are saying, hey, last year I used TurboTax. I went to use TurboTax this year. They're asking me questions I don't even understand. I don't even know what is that even that they're asking me. And I said, yeah, that's what this is, and that's what that, and I go and I walk them through it, and then they just like, can I just come and have you do my tax return? Yes. So this week I've actually gotten 10 new clients from that crowd because it's that complicated, especially if you had advanced child tax credit last year. I'm going to talk about that real quick. Actually, let me get that out of the way. Advanced child tax credit is exactly that. Advanced child tax credit. They gave it to you last year, so you're not going to get it this year. Now, they only gave you part of it, and they did raise the credit, so it's not, I don't think people are going to notice that big a drop, but if you don't put on your tax return that you got that advanced tax credit, it's going to delay the processing of your tax return. It's plain and simple. And you're going to be like that person coming in January, it's been 8 months, why haven't I gotten my refund? Because you didn't fill it out right the first time. So there's two things to remember so you don't have that problem. If you got advanced child tax credit, they're calling it ACTV, like people are supposed to know what that means. And when I tell people, yes, that's the advanced credit, they go, oh, that. So you got that from June to December. On the 15th of the month, you got a sum of money. And it's not the same sum of money for everybody. Some people got 500, some people got 250. And then some people that were in that gray area got a prorated amount. So it was like a strange number. You know, it was like $273, whatever, because they prorated it because you almost phased out. You almost made too much money. But so they got it. So whatever that amount of money was, that's got to go on your tax return when we do it this year. The other thing you've got to remember, this is, I want everybody, put the coffee down, and you've got to remember this because this affected probably everybody. Advanced child tax credit only affect people that had claimed children the year before or 2 years prior, had claimed children, and the computer automatically gave you this credit. Okay, but this one affects everybody. Okay, pretty much everybody that's done a tax return or got Social Security is affected by this. So that's like everybody 18 and over in the United States is affected by this. Stimulus payments. Oh, yeah, that. You got a stimulus payment sometime between January and March of 2021. Okay? I need to know what that amount was. Okay, and some people got a check, some people got direct deposit. For whatever reason, if for whatever reason you and your spouse were not married the prior year, but you were married in 2021, you each got a separate payment. I still need to know that. I had somebody say, well, I got it, but we got married in 2021, and I don't know what my spouse got. Well, I need to know what she got because I have to put them both together on the tax return. That is crucial. A piece of information. Why? Because most people got $1,400 just for themselves. So you got $1,400. Tom, you got $1,400. You're a breathing, warm-blooded American citizen in 2021, you got $1,400. Yes, Tom's nodding. See, even Tom knows he got it. And Tom is like Mr. like knows nothing about taxes, okay? So he's here just looking at me most of the time going, really? By the way, Tom's my engineer, for those of you who might not know that. My engineer this morning. I didn't say good morning to you, Tom. Good morning, Tom. Actually, we've been here talking for 20 minutes before we get on the air. So you got your $1,400. I have to put that on tax return. What happens if I don't? The program is going to give you $1,400. So you think your refund is going to be $5,000. Instead, it's going to be $3,600 or whatever. The people that are usually affected by this are people that owe, so they owe $2,000. Well, the program will take that $1,400 and apply it as a credit against what you owe. So the program will say you owe $600, where really you owe $2,000, and you'll be, oh great, $600, that's a good year. You go ahead and throw that check in the mail to the IRS, or you have it debited out of your account, however we set that up. And what's going to happen right about November of 2022? You're going to get a letter from the IRS saying you owe $1,400 plus interest and penalty. Thank you very much. You can just send the check within 30 days, or we're going to lien, levy, and garnish your bank account. Because they go right to threatening on that letter. That letter is, it goes right from, we think there was a mistake on your tax return, to we're going to levy you. And they only send the letters out every so often. It's periodic. So what happens is you get that letter, and then by the time you figure out what happened, and if you did it your own tax return, you're going to be Googling and finding out and looking and all that. By the time you figure it out, the next letter comes with more interest and penalty. So to avoid all that, you need to tell me how much money you got last year for that third stimulus payment. And there was only a third stimulus payment. And I don't know how people don't know. Some families got as much as, if they had 4 children, or husband and wife with 2 children, husband and wife with 3 children, 4 children, whatever. Some people got $5,600. Some people got $7,000. How do you not know you got $7,000? How do you not know? Did you get, you would know, I would know. I mean, everybody would know. $7,000. Okay, that's not like with the, sometimes when refunds are $500 or $600, people are like, I don't know, because I always ask, did you get your refund from last year? If it's a couple $100, they're like, oh, I really don't know. I didn't notice it. I don't remember. They'll get on their phone and they'll go back and they'll try to look it up, and I'm like, and I get it. That's a couple $100. I mean, that could be, I've had bigger bank errors than that. So you may not know. But how do you not know you got 7,000? That's like a high point. That's like a high watermark in my financial dealings, okay? Hey, honey, there's $7,000 in the bank. Woohoo. Where did it come from? Well, it says right there, IRS. So that's where it came from. But people are like, I don't know. You should have gotten $7,000. Well, I don't know. You don't know? What do you mean you don't know? What kind of balance are you carrying in your bank account? I mean, usually it's like $50. All of a sudden, it's $7,050. So an event just happened. What is that event? And I need to know. And you can see why that's going to mess up your tax return. If you got $5,600, if you got $4,200, and then I tell you, oh, you're going to get a $4,000 refund, that's the difference between getting a $4,000 refund and owing $800. So this is going to be a big deal, and a lot of people are going to get sandbagged by this. It's going to sneak up on them and get them, and there's going to be a lot of letters. Even the IRS is telling us to warn people about this. Let them know. They're looking for it. Stimulus payments and advanced child tax credit. Now I'm going to talk. It's time for a break already? Yeah. I just got on the air. We just got on the air. Time flies. Okay, so the topics for the show today are going to be 10 strategies for S corporations. So those of you out there that are LLCs or Incs that are being taxed as an S corporation, I have got 10 tax strategies that are going to save you some money. Okay? Now, these are strategies. These aren't, deduct the neighbor's children on line 5. That's not the kind of stuff. This is long-term strategies and some things you can employ in your business dealings, okay? I'm also going to talk about, again, because every year I feel the need to go over this, because every year this comes up in audits. You have a sideline activity, and so many people have sideline activities now. Is your sideline activity a business? Or could the IRS say it's a hobby? I'm going to talk about that. And then when we come back, I'm going to talk a little bit more about this advanced child tax credit, because there are some traps. I don't know any other way to say it. There's some traps out there, and there are some things that you can get stuck with on this. So let's go ahead and let's take that break time. We'll come back. I'm going to talk about advanced child tax credit some more. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
This is Gilbert. I've made a career out of helping businesses. Something else that can help businesses is a good sign. Let me tell you about DS Signs and Graphics right here in Spindale. Whether it's outdoor signage, banners, printing, or promotional items, call Alex at 828-286-4900. And remember, a good sign is good business. This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300.
We are back. Gilbert Talks Taxes. That was an all Gilbert commercial moment. We're back on Gilbert Talks Taxes, WCAB AM 590, FM 100.9. Those of you live streaming, good morning. I am wearing my vintage bow tie. I'm at that age, Tom. I don't have old clothes. I have vintage clothes. Oh, yeah. Well, at least that's what they say on eBay. Yes. My vintage tie. Yeah. Can you get more money for it? We're here in the Blue Room. We are live. This is live radio at its best on this cold morning. I hope everybody's got their coffee or their hot chocolate and they're just snuggled up warm listening to me. This year, we are proud to announce, and I really am proud about this, we're having Protection Plus, the insurance company, with every tax return that we do this year, every 1040, let me say it that way, every individual tax return that we do, the tax client, are getting for free. Gilbert is paying for this. This actually comes out of my pocket, but we felt so strongly about this. We really want to do something that's going to elevate this whole tax preparing experience. Why do you go to a professional? You go to a professional because you want everything, number one, done right, and you want to get things you just can't get when you do it yourself. One of those things is we're offering free, again, audit defense, $1 million policy. I'm holding it up. Those of you live streaming can see it. Every tax return we do gets a $1 million audit defense from Protection Plus. It's not from us. It's from Protection Plus. Services to resolve notices, inquiries, and audits associated with your tax return. And that is for 3 years. For 3 years after the date we do that tax return, you have this audit protection. And there are actually people, back office people at Protection Plus handling any audits, any letters, anything you have, any issue you have because of that tax return. They're involved. Now, I'm still involved in it. It's not like I push you off to them. We send it to them. They review it. They come up with the resolution. We implement it as together. It's a team. I'm very excited about this. There's also identity theft restoration. Should any identity theft issue happen as a result of your tax return information, and those of you that were working at the factory, I'm not going to name names, just recently had a major HR breach. All 200 plus employees' personal information was emailed by human resources to a person claiming to be the company's CEO. Why would the company's CEO need the profiles of all 200 people working for the company? I don't know. HR said she got an email, and the email looked good. So with this kind of craziness happening, identity theft restoration is a major thing. There's also tax preparation guarantees. There's a $2,500 reimbursement for out-of-pocket. This is really a great program. Come on in. When I do your tax return, you'll get the information on this, and it's included for free with every tax return that we do in 2022. Hey, that rhymes. For every tax return we do in 2022. How about it? How about it? If you get audited, you are covered. That didn't rhyme. Okay, let me talk about. I didn't get my information out, Tom. I see. I got right into it. That's how all about taxes we are. My telephone number. If you need to reach me, you want to make an appointment, you want to call me. Everybody knows who Gilbert is, right? By now. If you need me, my telephone number is 828-289-9300. We have 2 offices. We have one in Rutherford, 113 Whitesides Road. We have another one in Tryon, 226 South Trade Street, the beautiful Art Deco building right off the historic downtown Tryon. And it is historic. That town never changes. No, it hasn't changed. I have pictures on my wall in Tryon of downtown Tryon from 1946. 1946, 1947. I have a picture from 1919, the line of men, most of them on their horses, lining up to make a phone call because there was a phone. Oh, yeah, Tryon was happening in 1919. Oh, yeah, they were cutting edge. They had a phone downtown. Yeah, right. And Trade Street was mostly mud. Yeah, it was a dirt road. But, I love it. It's the good. Now, I'm going to say right now, and I'm going to tease this as we go along through tax season, we have 2 locations for now. That is hinting there's a 3rd location coming. We've been keeping this under wraps for a while. Yeah, I know I bust at the seams every Saturday. I want to say it. But we're getting close. We're getting close. Okay, I'm going to talk about the advanced child tax credit. So there's a question we're getting a lot, and it's getting it's the IRS attention about it. They're talking about it. If you claimed children, so for whatever reason, many people don't claim the same children every year. For whatever reason. There's a lot of reasons for it. I don't want to get into all the reasons. But one year it might be the grandparents may have claimed them because that year they could legally claim them. Okay? The next year the parents are going to claim them, or if there was divorce, one parent may be claiming them, the other one's going to claim them another year, whatever different arrangements, and there's an infinite number of combinations. So that's not what I'm getting into. What I'm getting into is the IRS based that advanced child tax credit on the tax returns for the prior year. So we had a lot of people getting this $500 or $250 or whatever amount of money from June to December that aren't going to be claiming those children this year. Are they going to have to pay that money back? The answer is maybe. It depends how much money you make. It depends on what threshold you're in. Some people are going to have to pay that money back. Other people are not. So it's not a blanket answer that yes, you're going to have to pay it back. There are waiver thresholds. Okay? So if you're in that position, just be aware of that. Because we're getting phone calls from grandparents who are getting this letter now, the 6419 letter. I told you it's the letter we have to have if you got the advanced child tax credit. Well, they're getting it, but they're not claiming the children in 2021. I don't want to say children. They're not claiming the dependents because they're not always children. They could be a lot of things. You get earned income credit, child tax credit for a lot of reasons. Some of them are teenagers. So for their dependents, and they're worried because they got whatever amount of money they got. Some people got, $3,000, $4,000, $5,000. So they're concerned. You need to be concerned because you might have to pay it back. Be aware of that as you go to prepare your tax return, and make sure you let your tax preparer know that you had advanced child tax credit. So we're doing it as part of just, if you're a new client, we're just going over this as part of our onboarding. If you are a prior year client, it's the first thing we're talking to you about. Okay, Tom, have I talked about that enough? I've talked about that enough. Yes, Tom's just agreeing. He doesn't know. He doesn't know. Okay, 10 tax strategies for S corporations. Let me get into S corporations. What is an S corporation, Tom? Ask me, Tom. Ask me. Ask me. What is an S corporation?
What is an S corporation?
Okay.
I gotta know.
I know you gotta know. Okay. A lot of people assume when they create an LLC that they're going to be taxed a certain way. An LLC, okay, limited liability company, an LLC is just an entity. It's just all you've done is you've created an entity on paper. And you've done that with the state of North Carolina, or you've done that with one of the 50 states. Actually, there's the 50 states and territories, and there's international. There's all kinds of ways to create an entity. Most people just create it in the state they live in. Now, I'll get a lot of phone calls. Let me go down this road here for a minute. I'll get phone calls, people that want to create an entity, and they want to discuss with me, is there a tax advantage or is there a reason why we would want to do it in Delaware? Delaware gets a lot of advertising about create your corporation in Delaware. You'll have tax savings. You'll have this, you'll have that. Nevada is another state you often hear. Utah is another state you often hear. Florida. People say, I want to incorporate down in Florida. For what reason do you want to incorporate in Florida? Well, I hear I'll have tax savings. That's not necessarily true. That's not necessarily the only reason you would want to do it. Are there tax advantages or tax favoring, are you tax favored being in another state? For most people, no. For the average, just mom, pop, small family business, no. The advantages just aren't there. But for other businesses, yes, there are tax strategies you can do based on the state you're incorporated in. Some of the biggest benefits to incorporating in certain states is what happens in case of a lawsuit. So as an example, in Delaware, and this is just an example, in Delaware, if you have a business proceeding where you're a business being sued, the lawsuit, and I'm being very general here. I don't want emails from every lawyer giving me some outlier case. This is just a general guide, general for conversation. If you have a legal proceeding, you're being sued, you're having a legal matter involving your business. In Delaware, it's heard by a judge who is a business specialist. That's all he does is hear business matters. It doesn't go to a jury. It doesn't go to, some magistrate who may or may not understand the law. Because believe it or not, the law is very complicated when it gets to business. Uniform code and all these other things, very complicated. You tread in deep water real fast. So in Delaware, it's heard by that judge. On the flip side, if you get sued, you have to go to Delaware to deal with it, because that's where the entity was created. That is where, in business law theory, that is where the legal entity that you just created on paper lives, in that state. Okay, so that said, most people are going to do it right here in North Carolina. North Carolina is a good state for it. We have our North Carolina Secretary of State, has a very good website. It's very simple, very easy to do, and the price isn't a lot. You create your basic corporation for $127. That includes the $2 filing fee, or the $2, credit card fee, the $125 fee, and then you have a $200 annual renewal. Very, very affordable. It's a good way to do it. But what you've done is you've created this business entity. Okay, so you create Bob LLC. Now, how the IRS is going to tax Bob LLC is a whole other issue. People will come to me, I say this every year, people come to me and they say, I want you to do my taxes for my business. I said, okay, the business done tax returns before? Yes. What tax return did you file? They say, I filed an LLC tax return. There is no such thing as an LLC tax return. You're taxed There's several ways you're going to be taxed. You're either going to be taxed as a sole proprietor, where even though it's an LLC, you're a single member LLC, there's only one member, you're going to file it on Schedule C on your 1040, and you're considered by the IRS a sole proprietor. Single member LLC being taxed as sole proprietor. You can be taxed as a partnership. You have 2 or more members in this LLC. You choose to treat it like a partnership. Okay? You file Form 1065. Different set of rules, different set of laws apply for this. You're taxed as a partnership. You choose to be taxed as an S corporation. Okay, different rules apply. 2 or more members, you decide you want to be taxed as an S corporation. An S corporation has a lot of rules. You have to have 100 members or less, and it goes on and on. Or you can be taxed as a C corporation. Now, why would you want to be, how are you going to pick the one you're going to pick? That's the conversation we have. They all have their advantages. They all have their disadvantages. Okay? So you actually have to elect to be taxed as one of these entities I just named, one of these 4 entities. How do you do that election? When you get your EIN number from the IRS, they give you what's called a default. Based on the information you gave them, they're going to give you a default. It's either going to be a single member LLC or it's going to be a partnership. You then have to turn around and file and say, I want to be taxed as an S Corp. And you do that by filing a form. Now, you only have a set amount of time to do that, but there is late elections for you to do that. So if you didn't do it right away, you need to do it. So I have people now coming to me now. I know we're a little past our break time. Tom's clearing his throat. That's the we're past our break clearing his throat. That's the Gilbert. Yes, and he's making the break sign with his hands. Let me wrap this up, and then we'll take a break, and I'm going to come back and get into these S Corp strategies. I'll have people come, and they'll say, I created, and we've actually already had this year. I've had 6 of these. That's why I'm talking about this. I created an LLC last year. We're going to file an LLC tax return. And so I'll ask to see that EIN letter that you got from the IRS, which if you did it online, you can print it right then and there. You get it. I suggest you save it as a PDF and you print it, because that little letter is very important. So they bring me that little letter, and I tell them, according to this little letter, you are being taxed as a single member LLC. How do you want to proceed going forward? Now, so much time has passed, we can't just file for S Corp status. We now have to do what's called a late election. And we file Form 2553, but we request for late election. And there's a lot of rules on what type of late election relief you want. Okay? So it's not a simple thing. But you can still choose to be taxed as an S Corp for 2021, even though you're going to do that election this year. And that can save you a lot of money. So you really want to consider this, and you want to see what your election is and how you're doing it, especially if you created the company in 2021. Let's go ahead and take that break. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
This is Gilbert. I want to tell you about Jesse James Railroad Express at 531 Railroad Avenue in Rutherford. It's a great place. Jesse's a good friend of mine, and I encourage you to stop by and support him. On Mondays, he's doing a 99-cent hot dog, mustard, chili, and onions. When you go, tell him Mr. Fabulous himself sent you. I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8800. 8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. I want to tell you about another great local business, Forest City Concrete and Grading. Call Sean at 828-447-5949. Sean is a licensed general contractor. He can do your job from site development to completion. That's Forest City Concrete and Grading. Call Sean at 828-447-5949 and tell him Gilbert Talks Taxes sent you.
We are back. WCAB AM 590, FM 100.9. Those of you live streaming, thank you. Good morning. You're watching us here. You're at www.wcab59.com. And those of you listening, I'm sorry, I'm reading my own notes. There's a lot of tax. See, Tom's my barometer. I can tell if I'm getting too deep into tax load because I start losing Tom. When I start losing Tom, that's when I'm like I reel it back in. I don't want to get too deep. Well, I don't know if you were listening last week, but I've spoken with some people that review my. They're trying to help me with my internet stuff, and they said, and they're able to track some of the people that are listening, the people that follow, because we rebroadcast this as a podcast, and so some of the people that are following me. And they said, do you realize that a lot of the people that listen to you are EAs and tax attorneys and CPAs? I said, really? I said, yeah, you have like a huge following with them. I said, really? Yeah, they must listen to you to get the tax law. Because I'm the one reading the 10-pound book. So they don't have to. I'm the one looking for all of this. Now, getting back to S Corps. So my telephone number, one more time, 828-289-9300. To make an appointment with me, I can help you with all kinds of things, tax returns, tax audits, business formation, investments. I can help you with any of that. Call up, make an appointment. You can see me either here in Rutherford or in Tryon. I keep appointments at both places. Okay, I'm going to get back to S corporations. So we decide we're going to make you an S corporation. Why? Because you can save a lot of money doing an S corporation. But it's not just this automatic thing, oh, we're going to save a lot of money. There are some strategies even there. So what you're going to do, so we meet, you tell me what you're doing, and I say to you, Tom, I really think that business idea of yours is great. Leisure suits are going to come back. You want to start making them? That's fantastic. Let me help you. I didn't want to say widgets because everybody says widgets. Yeah. What is a good business idea besides leisure suits? So Tom's gonna. I don't know, Tom. You know, we used to wear them back in the 70s.
I didn't.
They could come back. So you've got a great business idea. How are you going to be taxed now? So we have that conversation, and I explain all the advantages of them all. We decide on an S corporation. So what do you do differently? Really, you're not doing anything differently. When you're an S corp, a C corp, a sole proprietor, a partnership, you're still running your business the way you run your business. All of this stuff is behind the scenes, and how we do bookkeeping and how we track the income, how we track the expenses. Another conversation we have in that conversation is we talk about, are you going to be cash or accrual based accounting? Cash accounting, you deal with everything now. You spend $1, it goes on the books that you spent $1. $1 comes in, you put on the books $1 as income. Real simple. Accrual gets very complicated. Accrual, the minute I call you and said, Tom, I want to place an order, here's a $10,000 order, even though you haven't gotten the money, you post that $10,000 to your books. You know, it's a legitimate order. I'm a legitimate buyer. You know I'm good for it. If I called you and placed an order, it's going to happen. You're going to go ahead and make me that, whatever it is I'm buying from you. And you're going to make that, and you can post that. And so I placed the order for the $10,000. You now put it on your books as income, but you have to go ahead and buy the materials. So you're going to call Todd, your supplier, and you say, Todd, I got an order. I need $5,000 worth of this product. Todd says, great, I'll have it over there in a week. You can actually put it on your books now, right now, as an expense. So accrual, you're accruing it, you're playing with the timing of it, and there's a lot of advantages to doing that. So cash or accrual, they both have their advantages. You know, when I talk about end of the year tax planning and end of the year strategies to reduce your taxes for the following year, I'll say this only works with cash accounting. This only works with accrual accounting. That's where that distinction is. So I'm just trying to make you aware that there is all these things. What's the old saying? The devil's in the details. All these things affect. So you just need to be aware of them. I'll worry about the details. You just know that this is a thing. So we'll make that conversation. We'll have that conversation. The other conversation we'll have is inventory. How are you going to post your inventory? Are you going to have inventory? How do we treat this inventory? LIFO, FIFO, last in, first out, first in, last out. There's different ways, first in, first out. Just how do we do it, and how do we track your inventory? Because it all affects the bottom line. Now, so we decide you're going to do an S corporation. Boom, you're an S corp. It's that simple. We file tax return 1120S. Very simple. It's a simple tax return. You as the business owner, actually now you're a member. You're a member of an LLC. So you now, as the business, as a member of this LLC, you now get what's called a K1. You and all the members get a K1. And the K1 reflects their share of the income, their share of the expenses, and their share of whatever else is on that happens on that tax return. So if you're a 50% owner, 50% of that belongs to you. If you're a 5% owner, 2% owner, those of you that invest in partnerships know every year you get this big old envelope, and in that big old envelope is a K1 with many pages. And you say, well, Gilbert, I just, invested $10,000. I own 0.0001% of this share of this partnership. Yes. So you get 0.0001% of the profit. You have to report it on your tax return. That's how that does. That's how that works. So with an S corp, you're 50% owner, or if you're 100% owner, if it's a single member. So we file a tax return. Now, these strategies that I'm going to talk about are specifically only for S corporations. Okay. One of the biggest things, and let's start with this, is the owner can reduce his wages that he's paying himself. A lot of times these owners are actually paying themselves too much money. They need to be taking more money as an owner's draw, so you can cut payroll taxes on the S corporation's owner's salary, and in some cases it's thousands of dollars. Too many owner employees are paying too high a salary to themselves. This results in overpaying payroll taxes by thousands of dollars. So we review, how much are you going to pay yourself? Keep a lid on the salaries, is what we say. Okay. Now this one, you can deduct the S corporation's owners, all of them, health insurance premiums. Okay, this could be the way these insurance premiums are going up. This is huge. Okay, especially if you have multiple owners. The S corporation establishes the health insurance plan for the owner. The health insurance premiums are then included on the owner's W-2 taxable wages, as long as the owner qualifies for the self-employed health insurance deduction that's claimed on page 1 of the owner's 1040. So you can, and this is a major mistake a lot of S Corp people do. They don't take advantage of this health insurance deduction. Okay. Tom, are you clearing your throat again? Break time. Oh, no. Okay. Okay, I'm sorry. I interpret all body language movements as something. Break. We got the break. Yeah, the break sound. Okay, it's time for a break again. Okay. Employ your children. The S corporation owner must pay payroll taxes and the child's taxes, but the saving income from the family's decrease in income taxes, each child can earn up to $12,950 in 2022 without paying any federal income tax. Okay? So, and really tax reform, the tax reform that we had with the prior president, the tax reform that we had, this was actually really good. It increased the tax benefits for employing your child. So it's up to $12,950. The child will not pay any federal income taxes. Okay, so that's number 3. Let's go ahead and take a quick break. I'm going to come back and talk about a couple of more of these, and then I'm going to talk about hobby versus business for your sideline activity. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
People come up to me and say, Gilbert, thank you for doing my tax return, and thank you for getting me that big refund. Do you have any ideas what I can do with that refund? Oh, yes, I do. Take that refund right over to NC Tractor and Farm Supply, talk to Phil, get you a brand new shiny red Massey Ferguson. That's NC Tractor and Farm Supply, Railroad Avenue. You can call Phil at 828-429-5008. By the way, mention you heard it on Gilbert Talks Taxes. I'm hoping he'll give me a discount when I go buy my brand new shiny Massey Ferguson tractor. As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous.
Hi, I'm Sandra. My husband Peterson and I own Precision Detail and Tint. We invite you to come to our new location at 620 U.S. Highway 64, Rutherford, on the corner of Silvers Lake Road and Highway 64. Whether you need specialty detailing for your car, RV, or boat, or window tinting for your automobile, or home or business, we can help you. Voted Best of Rutherford County for 11 straight years, you will know you will get quality work at a good price. Stop by for an appointment or call 828-245-8889. We're open Monday through Friday 9 to 5 and Saturday 9 to 1.
We are back. Gilbert Talks Taxes, WCAB AM 590, FM 100.9. Those of you live streaming just were watching us here laughing. We were laughing because Tom is having a hard time imagining me on a tractor. Well, I want one. My wife is the one that won't let me buy one because she says, where are you going to put it? She won't somehow letting me park it in the garage. It's just not her idea of what I should do. But let me make no mistake. I'm not talking about one of them great big. I'm talking about the little 1725, little 25 horsepower. You haven't seen those? Oh, they're adorable. Got a little backhoe on the back, little bucket on the front. Oh yeah, for my vast 2-acre holding. Yeah, and I've got 1 acre. I got 1 acre on one side of the street. The other acre's across the street. So I need, I can ride it across the street. Yeah. Tom laughing at me for wanting a tractor. Yeah. Hey, we gotta have, retirement goals, Tom. Retirement goals. My Massey Ferguson, I almost got it the 1 year, but it didn't go over too well with park. And I've got a little car, so I really think I can get the 2 in there. I really do. If you get the bucket up and you get the backhoe thing up and you slide it in just right. But no, she wasn't going for it. So, but that's okay. Maybe I can put a shed up on my vast 2-acre estate. Yeah. Let's get back to taxes. Quickly. Phil, are you listening? We're going to need to do another live broadcast. As soon as the weather breaks, I want to do another live broadcast from Phil. And he is listening, by the way. So Phil, get ready. We're doing it this year. We put it on hold last year, put it on hold 2 years in a row now because of things. But I'd love to do it. That was a great program the day we were live from there right after he opened at his new location. And we got to do this. Okay. So there's other strategies. Call me. because I'm going to run out of time on this. There's a strategy where you can sell your home to the S Corp, and then you convert it into a rental property. And who are you going to rent it to? Yourself. Tom, of course, you're going to rent it to yourself. Reimbursements of home office expenses. The S Corporation can reimburse you. So now these home expenses, these home office expenses, now become business expenses above the limits. You can rent your home to well, that's part of the other strategy where you convert it. You can actually do a tax-free rental of your home. There's a kind of a strategy within a strategy there. There's reimbursement of depreciation expenses, reimbursement of vehicle expenses, and one that I personally like, reimbursement of travel expenses. S Corporation, there are some strategies you can do there, and cell phone expenses also. And the thing with cell phone expenses is that when an S Corp provides an employee with a smartphone, or I say smartphone, whatever your telecommunication equipment of choice is, because nowadays it's not just limited to a phone, for non-compensatory business reasons, it is considered a working fringe benefit that is not taxable. So you can give your employee a phone for just the reason that you need that employee to be available. If for no other reason, then the corporation can reimburse the employee for the full cost of the phone. You can deduct the amount on the corporate tax return, and the reimbursement is tax-free. Okay, now, in the 7 minutes I've got left, a lot of people have businesses, little sideline businesses, whether you're driving an Uber, you're driving a Lyft, you're doing DoorDash, you're selling things you make on Etsy, eBay, you can even be selling on Amazon. Okay? So the question is your sideline activity a business, or is it a hobby? This is major, because in an audit, you don't want the auditor to say, this is a hobby. This is not a real business. In the past, typically who we've seen get burned by this a lot is people that will buy, a house on 20 acres, 15 acres, whatever, and they'll call it a farm. All of a sudden they have a farm. Or me with my vast 2-acre estate and my Massey Ferguson 1725 tractor, I'm going to declare it a farm. But there's just one problem. You have to actually be farming to have a farm. Growing grass in pasture land is not a farm. So how do they remedy that? They'll put a horse on it. And now they have a horse farm. Okay. And you legitimately could be planning to do this someday. But at some point, it becomes a hobby. And I've had IRS auditors question these. I even had them question it with a little retail operation that really was more like, it really was a hobby. The auditor nailed it. I mean, it was a hobby. The lady was just doing this to keep busy, and she had no intention of ever making any money. But the problem was, she told the IRS auditor that. You don't tell them that. So do you have a sideline activity that you want to think of it as a business? Now, you can claim the loss on your 1040. And it reduces your taxable income. So you've got your day job. Your day job pays you $50,000 a year. You've got this sideline activity, this business that you're doing, whatever it is, and this business activity loses $10,000. So when you do the tax return, your taxable income now is not $50,000. Your taxable income is now $40,000 because it's been reduced by $10,000. And you know what happens? You're going to pay less taxes. Okay? So some people really use this big time. I've had people that have lost so much money on their sideline activities, it almost wiped out their W-2 wage income, okay? And that's when we have this conversation, okay? We sit down and we talk about it. Is this activity a business? Is this activity a hobby? Okay, I actually have 8 pages of notes and 8 pages of tax law to back it up. So there are rules for this. There's what's called hobby loss rules, okay? And if your activity is deemed as not for profit, oh, that's a bad thing. Now, also what's important, and the reason it's 8 pages, is we have pre-tax reform and post-tax reform. So there's been some changes in the law, and there's going to be some more changes in 2025. So you're going to get grandfathered into some things, and this is where we need to sit down and have a conversation, because there's a safe harbor rules that are going to apply, and there's actually 2 statutory safe harbor rules in determining whether you have a for-profit business or not. And this is simple. We can do this. There was a weekend rancher. There's actually a case with a weekend rancher. And what made this a big deal was this guy was trying to take like a $30 million write-off. It was a big ranch. It wasn't a 2-acre vast estate, Tom. Okay, so there's some rules involved in this. Don't just assume because you've got this little sideline activity. Number one, if it lost money, don't just assume, oh, that's just money I lost. You could write it off on your tax return. Potentially, the big key thing is, was this a for-profit activity or a not-for-profit activity? And once you determine that, everything else can hinge around it. But it's worth sitting down and looking at this, and especially in the startup phase of a small business like this, because I've got somebody right now starting up a business, and they're getting ready to spend $55,000, $60,000 on some equipment that they need. There's no way the first 2 years they're going to make any money. They're just not going to. But it's going to take them that long to set it up. But they have every reason to believe that they're going to make this business because of some other reasons and things. And so it's a good investment, but they're going to have that business loss, and they're going to take it. Okay, we have 1 minute left. Somebody just called and asked about how long should you keep your tax records? This is an ongoing question I get asked all the time. So first, let me say this. There is actually no law on the books in this 10-pound book that I just picked up. There is no law that says how long you should keep your tax return. So anybody that tells you the IRS says to keep it for 3 years, that's just not true. Okay? There is no law. But say they all suggest you keep it for 3 years. Okay, why do we suggest for 3 years? Most audits, they're good. They audit back the last 3 years. So it's the last 3 years of tax return, based on the tax year. So right now, the tax returns they would be auditing is 18, 19, and 20. Okay, 21 we haven't done yet. So those are tax returns that are getting audited. So if somebody said 3 years, you go, oh, okay, well that's 2019. Not really. What we suggest is this, and this is what I'm suggesting: keep at least 7 years. Why? Because there's that gray area of where does the 3 years start and where's the 3 years end. Okay, so so the auditor is auditing something, and in it there's a question of a decision or something that you did. Oh, I'm over time. That might have happened 2 years before. So now they want to see those tax returns. And with everything being digital now, I can back up your entire file on a tiny little jump drive. So you don't have to have it like a box of paper. As long as you can print it. Now the IRS rule does say this. As long as you can give them paper copies of everything they need, and never, ever, 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 Tom, that means never, give an IRS auditor or an agent or anybody originals. Always give them a copy. Okay? There was actually a case where the auditor lost boxes of original documents, and the courts said the IRS was not liable for it. Okay? So that's that. I'm over time. I am so sorry. But so a minimum of 3 years, keep them at least 7. That's my advice. We're over time. I'll be back next week. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
Abortion opponents marching in Washington. ABC's